The following is a presentation of TFNN. It is now time for Trade What You See with your host, Lary Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Lary Pesavento.
Okay, good afternoon, folks. And I started the show this week by posting a chart into the Tiger TV of the New York Stock Exchange Index. I'm going to go through several of the indexes today to show you the importance of what happened last Thursday when we were down at these really critical Fibonacci numbers across all the indices. They were all hitting pretty much spot on, but the NYSE made a 786 retracement off of the August low, which is very, very important. And also the other thing that I think is important here is that the strength of the market has been masked, a lot by some of these things like the small caps. But the small caps have actually gone below the low of January. They've made new lows on the year as of last Thursday. Now, at that time, we completed a perfect AB equals CD pattern. That just tells you the importance of the low that we had. We had just absolute unbelievable Fibonacci numbers hit last Thursday, just absolutely spot on, and I'll post these into the room so that you can take a look at each one of them. But the Russell Small Cap Index completed a major AB equals CD pattern off of that double top. It was at a 61% retracement of the low from last August, which was well over, a year ago. And so it's been, it's a very, very important pattern that we have here. So it should come out of here very, very strong. But we've got some things that are giant warning signs that I want to cover later as we go through the show. But first I wanted to go through and show you some of the amazing numbers that these things actually hit as they were going through. The next one we'll look at here is the cash S&P index. And again, we hit the exact 786 to the tick in the S&P cash index. That was last Thursday also. And so far we've had a pretty good rally. We rallied up to the just about to the 61% retracement level earlier this morning, and then we've given some of that back. So the key here is the importance of this low that we just made here on October the 3rd, folks. You just circle that on your chart, because should we go below that, there's going to be trouble in River City, quoting the West Side Story. Anyway, this is the next one we're going to take a look at here is the Dow Jones index, and it's showing that the low that we made on Thursday in the Dow Jones at 16,600 was also an exact 61% retracement, coming off the August low. What really amazes me is that no one even talked about the fact that the Russell 2000 went below January's lows. I mean, no one talked about that. For that to happen with the Dow Jones, we would have to be below 13,000. So you can see the difference that we have in this bifurcated market. I knew I would get that word in here sometime today. But you're seeing different things in a lot of these different markets. Now, the other one the one that everybody watches very closely, of course, is the NASDAQ. And here again, you'll see the exact same thing. The NASDAQ made the exact 61% retracement, and it rallied 100 points off the bottom. And so it's the S&P rallied 50 points off the bottom. And it's giving back a little bit of it today, but we'll see what the remainder of the week holds, because we've got a lot of cycle things coming due this week. This is going to be a very, very interesting week. Well, they're all interesting weeks, but some are more interesting than others because we have so many things happening this week in so many different markets. That's the real key to look at. Now, with the Dow Jones Transportations, after we made that 5-point reversal pattern, we've had a 61% retracement. You'll notice that made a perfect AB equals CD, coming in around 8,175 on October 3rd. And so far we've had a snapback rally, and that's all we've had so far. This is setting up for something really nasty, folks. That's the way it looks to me, but we'll have to wait and see how the cards are dealt. and we'll have to wait and take a look at it. Another market that looks real interesting here is the emerging markets. It also stopped exactly at the 61% retracement of the lows from January. It took out the August lows by a lot, and but it stopped at the January lows. This is telling me, from a cycle point of view, and from looking at the numbers of sacred geometry, of which the Fibonacci sequence is part of it, once it stops at these numbers and has a little bit of rally, and should it fail, in other words, if we go below the lows that we made last Thursday in the S&P, which was at 1919, and the low in the Dow Jones was at 16,620, I believe. If we go below those, we are going to see a very, very substantial downdraft. The reason being is when these numbers hit these numbers so perfectly and have a good rally, which, several hundred points in the Dow, 300 points in the Dow is certainly a good rally, and 50 points in the S&P is a good rally. But if we go back below those levels, that's telling us that that cycle topped very, very early. It only lasted 2 days, and that means it's going to be a big downdraft to the downside. I happen to be watching 60 Minutes, which I usually do every Sunday night, because I enjoy the shows that they have in the reporting. And they had the director of the FBI on, and he just reinforced what I've been thinking all along, that the biggest threat to our country is not regular terrorism, it's cyber terrorism. The way he was talking about it was just absolutely scared you to death. And he basically said that if you happen to, click on something to open an attachment, basically what you're doing is you're opening up all of your history and all of your numbers, everything, to hackers. And he was saying that it's so widespread that people just don't realize how dangerous the internet really is. I firmly believe that, because I get whacked quite a bit with these hacking stuff. But he mentioned that the two biggest places for cyber terrorism against us happen to be in China and then also in India. So just be careful, folks. I know you all are out there, but that internet is not a very nice place at times. It can be really, really nasty, looking at these particular things that we're watching. Now, I'm going to bring up a chart here that I have been keeping for a very long time. As a matter of fact, I've kept it for 27 years because it meant quite a bit, and that is the chart of what happened during 1987. And I'll see if I'll be able to get this in here without too much trouble. Hopefully it will post and we'll be able to see it. This is from my old CQG that I had years and years ago. I refreshed it back in 2009 and put it together so that you could see, what it looked like in this move. We topped on August the 25th of 1987. That was a day of harmonic convergence. There were 5 planetary aspects at 0 degrees at that time. After that, we broke for about 3 weeks. We went down from August the 25th down into, I believe it was the 22nd of September that year, and then we rallied for about 2 weeks into October the 2nd. The 22nd was a solar eclipse, and then we rallied into the lunar eclipse of October the 2nd. And then from there, we started down, and of course, we gave back 40% of our gains over the next few months. Well, that was the last few months. It only took about 4 weeks. But the key here is that we have a lot of similarities, folks, to what's happening now and what happened in 1987. First of all, we made a top, and we've come down a little bit, and now we're rallying back. That's the one thing. The second thing is we have a lunar eclipse and a full moon due on Wednesday the 8th. Okay? The next one that we have is we have on October the 11th, which happens to be the anniversary date of the 2007 top in the market before the financial collapse. That day we have Venus is actually in opposition to Uranus. In other words, at 180 degrees. In 1987, we had Venus at conjunction on October the 2nd when we were having the full moon. It was having a 0 degree. So they're exact opposite, but they have the same power. You don't know which one is going to be the most powerful, because an opposition and conjunction have the same amount of, cosmic energy, I guess you would call it. But we have some real serious stuff coming in here. So if we rally just a little bit like we are right now, we came off, 50 points off the bottom in the S&P. And if we can stay in this zone here all week into either Wednesday or Friday, that will be almost an exact setup like what we've had in 1987. There's one other factor that was happening in 1987 that's also happening now, and that is we have the planet Mercury went retrograde on October the 16th, the Friday before the crash. And then on Friday, October 3rd, we had Mercury going retrograde. Again, it goes retrograde 4 times a year, and it's pretty difficult to pinpoint an exact timing thing. That's why we use the patterns and the Fibonacci ratios and stuff. But all of these cycle things they're hanging over us just like we were in 1987. And folks, the number of people that are looking for anything like this is very, very rare. I mean, not many people look at astrology anywhere, and then they don't go back and look at anniversary dates. So this is a very interesting time that we're looking at here coming this week. I do feel very strongly that if we go below that low we made last Friday at 1919 in the S&P, boy, oh boy, we're in big trouble. This is going to be pretty nasty to the downside, as near as I can tell. But it's got to take that out. And ideally, what you'd like to see is you'd like to see it chop around here, somewhere between 1980 and the S&P and 1940, something like that. If it can hold those levels and go into Friday, then that's the time you want to be watching it very, very closely, because these big patterns have already completed. When you make new lows in the Russell Index for the year, that's very significant. I know it's a small index, but it's still very, very significant. The NASDAQ is also still acting strong. It's been the leader of the pack. But it, too, has also given back, quite a bit. It gave back 61% of the low that we made in August. The Dow Jones has been by far the strongest, of course, because it held up at the 61% retracement. That also happened to be a 382 retracement of the move that we had from April. And if you looked at this chart here from 1987, we made a low in the stocks in 1987. Right around April 15th, and we rallied up into August 25th. Well, that first correction before we got the crash came in at 38%, and that's exactly what we hit on the Dow on Friday. At 16,600 was a 38% retracement of the April low. So all of these things are starting to, build a little case for a potential bonfire here. So it hasn't happened yet, but it's setting up to do something pretty nasty to the downside. And if it works that way, fine. And if it doesn't, then we have no problem. Okay, we got the Dow down a little bit, the S&P down a little bit, and gold finally trying to rally. We'll be back in just a moment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back, and we're going to switch gears and go into the precious metals market. We have made retested the 61% retracement, it looks like, from what we've done in 2009. We've come down to this 1180 level. Last night we got down to 1182 per ounce. We've since rallied $20 an ounce, which is just a bounce so far. But what's interesting here, folks, I'm not sure how important it is, but it was sure important last night to me, and that is because we have hit a higher low in silver. Silver did not take out the previous low. We got our first caller from Dave in Clearwater. Are you there, Dave?
Yes, I am, Larry. How are you doing today, sir?
Good. What was your question?
I was taking a look at the gold contract, and it seems to me, and this is the one pattern that I think I just spent too much time overthinking. I guess it's just the engineer coming out of me. Looks like on the hourly, it's made a free drive to a bottom.
Yes, it has.
And are you seeing that as well?
Yes, I am. I'll post that as we get closer to the break. I'll put that chart in for us so we can look at it.
Okay. Because I'm thinking I took on the gold contract. I took a position early this morning because I've been kind of waiting for this three drive, what I believe to be a three drive pattern. Put it that way. A little nervous on the fact that on Friday we had crazy volume on the way down. I'm like, man, this thing hasn't tested very much. But I was like, let's see how it goes. Put it, I got a real tight stop in, and then so I'm just was looking at it. I was thinking to myself, man, this looks like a 3-drive to a bottom. We got 100% move for a move. Dollar looks like it might back off for about more than 10 minutes. So I kind of dipped my toe in on one contract at the moment, but if it holds on the next retracement, I might add to it. So I was just curious for your thoughts.
Well, I think I posted into the Tiger TV the 3-drive pattern that you're talking about. But what was interesting is when it was making it real early this morning, it was around, I believe, around midnight Tucson time, because my alert started to go off. And I was watching silver at the same time, and because silver was such a critical level on the charts on the long-term weeklies. And at that time, silver was not making a new low, which really surprised me. And so I watched it very closely. And then just a matter of a very short period of time, it really started, to move a lot higher. And that was telling me that possibly that was the bottom. What I'll do, Dave, is I'll put the chart of the long-term weeklies chart in silver in here, because we hit the exact 1.618 expansion on the weekly chart last Friday, and we did not go below it. That came in at $16.40 per ounce, and we got as low as $16.60 per ounce last night, and now we're trading, around $17.20 or something. And so that's telling us that pretty much that this bottom might be good for something a little bit more than a few days.
Yeah, assuming the dollar doesn't continue its Saturn V rocket-like propulsion upwards.
Well, as a matter of fact, the second part of this show is I'm going to focus on the U.S. dollar, because I looked at some really long-term things on the weekly chart, because the dollar's had such a big move, and the importance of that 125 in the euro. So I agree with you. I think that these currencies last night, they had a chance to, take off to the moon, and something happened at the launching pad, and they're starting to show signs of a little bit of, movement the opposite way. I mean, we've never had a market that's 100%, bearish like this one is. I mean, you can't find anybody that would say you would want to buy the euro or buy, sell the Swiss or sell the Canadian. I mean, just no one wants to do that. So the contrary opinion on this trade is, very, very high.
Yeah, well, I'm certainly not the currency aficionado that you are, but I know one thing's for sure: nothing goes up continuously, nothing goes down continuously, and to say that the euro and a couple of the other currencies are ridiculously oversold at this point, I think, is an understatement. So, I mean, the move down is so substantial that even to pardon expression, the dead cat bounce would be a substantial move upwards.
Yeah,
at least because it's had such a move down.
At least 300 pips would be my guess in the euro. So that would be that's a very, very large amount. But long term, the euro is very, very bearish, and I can see that. But right now, it's just at a point where there's so many people that are on one side of the trade. You have to go out and take an ad out to find somebody to possibly come in and find a buyer for the euro. So, but the fact that we've had our good rally, we've had 80 pip rally. That's our biggest rally in about 2 weeks just today.
Absolutely. Hey, Larry, thank you so much.
Thanks for calling in, Dave. I sure appreciate it.
All right, buddy. Take care.
Okay, we got the Dow down a little bit, gold coming back strong, and the euro is up on the day, believe it or not.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alrighty, we're going to take a look now at the long-term weekly chart of the euro, going back over the last 15 years. The euro came out in 99 at around the 125 level, dropped down to around 83, and from 83 it doubled in price up to the 160 level, and then it's been in a downtrend ever since 2008. We've been in extremely lower tops for quite some time. The target on the euro eventually, sometime in 2015, I believe, will be somewhere around 109 or lower. That's where the ABCDs measures, as you can see. But we're at a really critical time frame right now, folks, as you can see on this chart, and we talked about it last week also. That 125 level has held. We did get as low as 124.90 on Thursday and Friday by just a little bit. We closed exactly at that number on Friday, 125.12. And last night on Sunday when we opened up, instead of gapping down, the euro actually stayed the same, and then it started to rally, and we've rallied about 70 pips so far today, coming off the bottom. And this is an incredibly oversold market. So a 80 pip rally or 100 pip rally, 200 pip rally is going to be very, very minor here, but the preponderance of people that are bearish here is really overloaded. I think it's something around 95%. It's a huge number, and this is usually when you get these numbers. But this key number that we're looking at here in the euro at 125 was flat out spot on where it should have stopped, and it stayed there for 3 days. And we've been down for 16 weeks, which is in itself a very, very rare event. So that's something else that we really need to look at. Now, the next one I wanted to switch, and we're going to go over to Japan and take a look at the Japanese currency, the Japanese yen versus the U.S. dollar. And as you can see here, we have a 3-drive pattern forming at the 1.618 expansion up at this 109.90 level. The high overnight was 109.93. We've since sold off a little bit from there, about 60 or 70 pips. So that has potentially, held the market up here a little bit. But believe me, these things could literally melt down. I mean, if we go close below 125 in the euro, that would tell us that, it's still got a lot more to go to the downside. And if we get above 110 in the Japanese yen versus the U.S. dollar, that would also tell us that. But right now, we're at a very, very critical level here. If you'll check this pattern out that we're looking at here in this Japanese yen, and then just go back to 2007, you'll see a very similar pattern right at the top when it was making its top in July of 2007 up at the 124 level before it dropped down, to 75. So this is a really key spot for all of these currencies. It's not just the euro and the yen, it's all of them. It's the Canadian dollar, the Swiss franc, the Australian dollar. All of them are hitting the exact same important Fibonacci numbers that right on the money. I mean, they're just they haven't gone above them by more than a tick or two if they've done that. So it's very, very very critical time frame that we have coming in here, and it could be related to all these cycles that we're looking at in many of these stocks and other things that we've been watching, very, very closely. Now, the next one we're going to take a look at, we're going to go north a little bit to Canada, and you'll see that the Canadian dollar, going back the last 14 years, has made a 61% retracement. We've made a double top here, folks, from where we were in March of 2014. They came within 4 pips of the exact number Sunday night. That number was at 112.78 in 2013, and last night it was 112.73, only 5 pips difference. And since that time, the Canadian has sold off a considerable amount. It's down more than 75 pips from where we were just on Friday. So there's some type of a turn here in some of these things. So keep an eye on it, because it could get very, very dramatic, and that's what you're looking for, is to try to find some of these low-risk opportunities. But all the things were lined up just spot on. So you just literally, it was so close that it was really amazing. And if you took a quick look at this Canadian dollar, you'll see that it had an ABCD move over the past 3 months that also took it up to that double top. So you had the double top there, you had the 61% retracement from 2010, and they also had the 50% retracement, 50% retracement of the high from 2009. So all of those things tell us that we were pretty much spot on to where we wanted to be. And then the last one we wanted to look at here is the Swiss franc. And the Swiss franc also has been in a downtrend since 2006. And we have just completed a 786 retracement to the exact tick at 90. It came in last night at 97. Came in exactly at 97.89. The number was 97.90, which was right on the money. And we've been up for 14 weeks. So this is ready to have a pretty good correction. Also, we've got 3 lower highs here also in the Swiss franc. We had a lower high in 2012, 2013, and now another one. So it's at a very, very critical level of where we are right now. So, boy, when I was doing my charts over the weekend, I just looked at that and I said, I can remember when Tom O'Brien was jumping up and down on his stool, screaming about King Dollar when it was down around 75. And, it's been a huge move. The dollar got to 87 last night. So that's been a monster move over the past 18 months, but it's been pretty good a move for that period of time under anybody's imagination. So the next one I wanted to show you folks is the this long-term dollar index chart going back quite a few years. And I just want it goes back to 2003, and you'll see that we're still, even though that the dollar's had a really big rally here, it's still, all it's done is it's gone back to where we were in near 2008. We've got up to this level of around 87 in the Dow, and we were up around 89 or 90 back in 2008. So that's pretty much what we're looking at. Someone asked a question here about Russia and the euro and investing rates, interest rates, and stuff like that. I imagine the interest rates will certainly be affected, because if the price of our bonds goes down, that makes our interest rates go higher. But that doesn't necessarily mean that that's going to occur. I had someone chat with me over the weekend that brought something to my attention that made a lot of sense to me. I'm going to share it with you here. I don't know if it's going to happen or not. But let's say that you are the director of the Federal Reserve, or the chairman of the Federal Reserve Board, and you've got $2 trillion in bonds and, domestic, I think it's called mortgage paper and stuff like that. Most of it's in bonds and notes. But how do you get rid of that? And the best way to get rid of it is, if you think of the stock market going down, people have a flight to quality, and what do? They buy bonds and they buy notes as a flight to quality. And that's what happened in 1987. I don't know if you folks know this, but the bonds rallied 23 points, which was $23,000 when that market collapsed. And after the bottom came in is when they really took off. In other words, the bottom came in on October the 19th, and bonds were down 0.5 point that day. I happened to be long bonds, and I was scared to death, and so I got out of my position, and the things took off and just ran like crazy, to the upside. So you've got to see a potential here that if bonds get above the 142 level, they got a shot at, the old boat ride. We could get up to 160 possibly in the bonds, and that means I'd have to take a ride in one of Tom's boats. We got a call from Atlanta, Georgia. That must be PLN, I guess, right?
PLN is right.
How are you, Charlie? Nice to talk to you today. What can I do for you?
I'm a little bit tired. I picked up a truck in Detroit, then I drove it to York, Pennsylvania. And, they were having an auction on some lathes and drills and you have bits, a sharpening tool. And I was looking at that Pratt & Whitney equipment. I'm saying, who the heck can afford this? It turns out it was the U.S. Post Office that was selling it. We didn't know it because it was through a third party. And when I looked at the machinery, the one thing the auctioneer said to me, we gave this away. I bought a drill, a press drill, a Rockwell, $185. It's like you can't buy a hand tool for that price. Mm-hmm. Equipment that was selling Pratt & Whitney lathes, they sell 50, 100,000. We're selling for less than 2,000.
Wow. Well, when it's not their money, they don't care. That's for sure.
Yeah, and you know what? The thing is that the buyers are not there. The one thing he said to me, the buyers are absent. He's like, nobody pushing up the prices. I for a while there, I thought this was a joke until I looked at the equipment. I was like, wow, because I bought it on the scene. And I bought in Detroit, I bought a International 4000 series, 2007 for $8,700. Wow. You cannot buy pickup trucks for that. The pricing I'm seeing is incredible. Mm-hmm. And by the way, this gets loaded with the equipment that I have, and it goes to Mexico.
Mm-hmm. Well, that's good. What can I do for you today, my friend?
I'm looking at Priceline. I just covered a little bit at the 1118 level.
That was the level we talked about last Thursday, wasn't it?
That's what you said, and that's why I called you. I just did it. I said, okay. You said it comes back. It retested. It went a little bit below Thursday's level. Mm-hmm. But I think we're approaching the 1110, 1100. Somewhere in here it may settle, and maybe I will cover a little bit more. I'm not hoping for a bounce. Wondering what your thoughts are on that.
Well, we have to wait to see when it starts to bounce, and then you'll have a pretty good idea. But it could easily go back to 1,200, and it would still be in a very, very bearish scenario. So, that's only 20 points in a stock like that. So, right now, I would say, you're probably looking at the right thing to do at this point. But believe me, if we go below the lows we made last Thursday, we've already done it in Priceline, but if we do that in the overall stock market, I believe we're going to see something really serious happening, and we don't want to get involved in that on the long side of any of these things, because we're going to see a move to the downside that will be a little bit scary, in my opinion.
Mm-hmm. I know you were mentioning from the moon and the astronomy point of view. We have a very unusual event coming up, a red moon in the beginning of October. I don't know if you heard about that.
That's a harvest moon, yes. I'm quite aware of that, yeah. That's also part of the Chinese culture where they have their holidays and stuff.
Uh-huh. Any significance, you think, to that? Or
I don't know. I look at the patterns more than anything else, and, the long-term pattern in this thing has been very, very bearish. We've completed this major, pattern of the 5-point reverse wave, and that's just extremely bearish. The question is what's going to happen after this point, and we'll just have to wait and see.
Looking at Priceline, it's been bearish for a long time now.
Well, you've been shorting it. You did the right thing, right?
Yeah, I shorted, and I keep, as it's bouncing, I short. I covered today. I'm hoping for another bounce. I was surprised when you just said 1,200. I'm looking at the chart. I'm like, wow, that's past the 9-day. But it's near the 200-day. So, there is... Can it bounce to 1,200? Wow. Now you put a little fear in me.
Well, there's no fear if you've already done really well with it, so don't have any fear.
Yeah, we are down a little bit, but that's normal. I think when you try to test a low Thursday, take it a little bit lower, the volume seems light, and then it gets a bounce, and I was thinking more like maybe 1185, somewhere around there, just a little bit past.
Sure, that could easily do that. That's close to 1,200 anyway, so that's not a problem.
Okay, so you were pretty much in sync on that.
Yes.
Okay, nice speaking to you, and thanks for the guidance.
Hey, thank you for calling in, Charlie. Always like to talk to you.
Same here. It's been fun. Take care. Bye.
Bye-bye. Okay, folks, well, we've had a little sell-off here in the market. What we're doing right now in the S&P is we're making a 382 retracement of the low we made last Thursday at 1919. We went from 1919 up to 1970. That's a 50-point rally, and now we've just made a 38% retracement back here to 1951. The $64 question is it going to hold 1951? If we make new lows today than where we were on last Thursday, folks, this is going to be a very, very nasty week. This thing will not have many friends. And I don't know if you folks follow the German DAX market very much. That's equivalent to our S&P, and we're already taking out the lows of the lows that we made last week. I'll put this chart in so you folks can look at it, but we're almost at the 786 on that level. So we'll be back in just a moment with stocks weakening and gold strengthening.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, I'm going to switch gears here, and we're going to talk about something that we all use, and that is the oil market. The price of gasoline. I've noticed today they were showing it on CNBC that there were several places in the United States where gas was under $3 a gallon, being sold for $2.97. We're about $3.14 a gallon here in Tucson, so this thing is really getting ready to accelerate possibly. And what I've posted in here is a potential bearish scenario here in oil, because if we go below $87 a barrel in oil, and what we hear is that the break-even price for Russia is at $90 a barrel. In other words, under $90 a barrel, they're not making any money. So, right now they're at break even pretty much, because we're trading just a shade under $90 a barrel. But if we go below $88 a barrel, this is going to turn the trend down, and we are, ready to really collapse. Now, if we can hold here, if we can hold this area of $88 per barrel, which was the low we made last Thursday, we've still got a chance in oil to accelerate. But if you look at the price of gasoline, and if you look at the price of heating oil, and this is the 1st of October, where heating oil is in one of its strongest seasonal historical areas for her rallying, and crude oil, the heating oil is getting hammered, really badly. So no one is buying backward supplies, backup supplies of heating oil. They're expecting a very warm winter, or the supplies are just so enormous that it doesn't make any difference. So this market could be the next one that starts its leg down like we did in the metals market with gold and silver, and we already know what's happened to the grain markets. They were decimated. They dropped in half, some of them, and so it's been a real bearish deflationary scenario all across the board out here. So keep an eye on crude oil. If we go below $88 a barrel, that would be what I think would be a very, very negative scenario, and we'd be looking at a minimum price of $50 a barrel, which is a considerable down from where we are, right now. So the main thing is that it needs to get below that $88 a barrel, and then that would trigger that to the downside. I think the most important thing to remember from the show today, at least from my perspective, is to watch the low that we made on Thursday. That's at 1919 in the S&P, because if we go below that, I think we're going to be seeing something, at least something in the low 1800s, and might even be this week. It'll be something really, really dramatic, because they haven't really shaken the tree over there in the stock market for a long time, and it's coming. It's just a question of when. And we have all of these cycle things occurring this week. We've got the lunar eclipse coming in with the full moon on the 8th, and then we have the opposition of Uranus and Venus coming in at on the 11th. So all of that is happening, and we have the anniversary date of the high that we made in 2007 also at that time. So that it's really amazing that all this is coming together, and it's very similar to what we had in 1987. That's what's so troubling about it, at least from the bullish standpoint. From the bearish standpoint, that's exactly what you want to see what's happening. But we'll see. There's also that Mercury is also in retrograde motion now, and classical astrologers say that when Mercury's in retrograde motion, it causes people to make faulty decisions. Well, that could be true. We don't know yet. But going below 1919 in the S&P or 16,600 in the Dow Jones, I believe would be very, 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 very bearish, in my opinion. Also, we have a chance here for gold and silver and to rally, and also the U.S. dollar to sell off, and some of the currencies to rally here that we mentioned. All of these numbers are very strong, but they're very tentative because they're spot on, and if they break, that means they're going a lot lower. Okay, folks, live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.